Good afternoon from the New York Stock Exchange. I'm Caroline Woods coming to you from high above the trading floor on this Thursday, November 13th. You just saw footage of the opening bell this morning. TKO Group Holdings and Polymarket kicked off the trading day with TKO executives Ari Emanuel, Mark Shapiro, and Dana White, joined by Polymarket CEO Shane Copeland. In terms of the news today, the longest government shutdown in the history of the U.S. has now ended. Late Wednesday, President Trump signed a bill to keep the government funded through the end of January. The measure was approved in the House by a 222 to 209 vote. The deal reverses cuts to the federal workforce and is good news for employees who have been working without pay. It should also ease the shortage of air traffic controllers that disrupted travel nationwide and resolve ongoing court battles over partial or full payment of food assistance programs. Now, despite the good news in Washington, the stock market isn't reacting positively. Major averages are down, with weakness in big tech leading the losses. Tesla, Nvidia, Alphabet, Amazon, Apple, and Netflix are all lower today. We're also seeing weakness in consumer discretionary, utilities, industrials, financials, and real estate stocks. Disney is the biggest loser on the S&P 500 after posting mixed quarterly results. Earnings beat expectations, but revenue fell short, dragged down by a slump in its movie and TV business. Entertainment revenue dropped 6% from last year. Disney did add streaming customers. Disney Plus added 3.8 million subscribers, reaching 131.6 million in the quarter, and Hulu rose to 64.1 million subscribers. Theme parks were a bright spot as well, with domestic revenue up 6% and international parks up 10%. Executives say consumer demand remains strong, but box office softness will hit profits. On the upside, Cisco is one of the best performers on the S&P 500 today following its earnings report. The networking giant beat Wall Street's expectations for its latest quarter and raised its outlook, saying demand for AI and secure networking is driving what could be its strongest year yet. Cisco is updating its gear and chips to handle the heavy data traffic that powers AI systems, working closely with chipmaker NVIDIA. CEO Chuck Robbins says the AI opportunity should accelerate in the second half of the fiscal year as more companies invest in the networks that connect increasingly powerful data centers. Taking a look at other stock movers today, retailer Dillard's is having a good day. Shares are surging after the company's third quarter revenue topped analyst expectations. Sales at stores open at least a year rose 3%, better than the flat performance analysts had expected. Dillard's stock has climbed more than 60% so far in 2025. Other retail stocks on my watch list are lower today, with Wayfair, Five Below, Dollar Tree, Gap, and Williams-Sonoma faring the worst. Travel stocks are also having a tough day, even with the government shutdown ending. Airlines, cruise lines, hotels, and booking platforms are all showing weakness. Not all consumer names are in the red, though. Some restaurant chains are gaining ground, including Sweetgreen, Applebee's owner Dine Brands, Chili's parent Brinker, Domino's, and Chipotle. Starbucks is under pressure on one of its busiest days of the year after its workers' union launched an open-ended strike in more than 40 cities. The walkout coincides with Red Cup Day, when the coffee giant gives away reusable holiday cups, and involves more than 1,000 baristas at over 65 stores. The union, Workers United, says employees voted to strike after failing to reach a collective bargaining agreement with the company. Meanwhile, Flutter Entertainment, the world's largest sports betting company, is sinking after mixed quarterly results and cutting its full-year guidance because of winning streaks from gamblers. Separately, it announced a new prediction markets app called FanDuel Predicts that's set to launch in December. One of the few sector bright spots today is energy. Chevron, the second largest oil producer in the U.S., is adding to that strength after it said it plans to build power plants in West Texas to supply energy-hungry AI data centers. The first plant could come online by 2027, part of a broader effort to expand its electricity business as demand from tech companies surges. The oil giant is working with GE Vernova and investment firm Engine No. 1 on the project, which could eventually generate up to 5 gigawatts of power, enough to serve millions of homes. Chevron said it's in exclusive talks with the potential customer and expects to make a final investment decision in 2026. And some good news for retirement savers. The IRS is raising how much you can put into your 401k next year. The new limit is $24,500. That's up $1,000 from 2025. Workers 50 and older can also sock away more with higher catch-up contributions. IRA limits are going up too, and higher earners can contribute more to a Roth IRA than before. And speaking of saving, it's the end of an era for pocket change. After more than 2 centuries, the U.S. Mint has stopped making pennies. Production officially ended yesterday, marking the end of a 230-year run for the 1-cent coin. Billions of pennies will remain in circulation and can still be used as legal tender, but no new ones will be produced. Most of the minting actually quietly wrapped up over the summer. So if you find a penny on the sidewalk, you might want to pick it up. That's all for today. I'll see you back here tomorrow for another update. At the New York Stock Exchange, I'm Caroline Woods.